19 of Yield TV. All right, Arthur, welcome to Yield TV. So everyone, in case you don't know Arthur, in case you've been living under a rock for the last 6 months, Arthur, who goes by Arthur0x on Twitter, is a really renowned DeFi investor. And I have really just followed you, Arthur, over the last year because I feel like I have a lot of interest in a lot of the same portfolio projects you've invested in. So anyways, Arthur, welcome to Yield TV.
Yep, thanks for having me. Pleasure to be here.
Awesome. And Arthur, where are you based out of, if you don't mind sharing, or what part of the world are you in?
Sure. Yeah, I'm based in Singapore right now. Yeah.
Very cool. Very cool. Well, thanks for talking to me at a later time. So, Arthur, I think today we want to talk about really your hypotheses about the DeFi market. You're one of the most bullish DeFi investors. I naturally, as DeFi dad, I think gravitated towards a lot of your hypotheses. And I think one of the first places I started to really notice how outspoken you are about your bullishness on the market was with synthetics. So we'll definitely cover that today. And then probably the one recent news topic I would like to cover as well is just the fact that PayPal just announced that they're now supporting cryptocurrency payments. So that'll be interesting to sort of cover. But Arthur, why don't we start with the simple stuff? Can you talk to us about your journey becoming an investor in the crypto markets and then focusing on DeFi?
Sure. I've started investing at a pretty early age, since when I was 20 years old, and I was always a very fundamental based investor. So when I just get started in crypto, I was always trying to look at the investment case beyond pure speculation. And after I learned about Ethereum, I realized that you can actually build a lot of different applications on Ethereum. And this is something that makes it investable, because I think the best analogy I learned so far is still that you can think of Ethereum as an app store that you can build different applications on top of it. And I think this become pretty natural, because I think that this will lead to a lot of different use cases. And so that's how I get started. And then bought my first crypto at 2017 and went through the bull market. Went through the ICO bull market, and then after that the bear market. And I think the interesting thing is during the ICO boom, there was a lot of different experiment and use cases. And after a while, you realize that most of them actually do not make sense. They were all over ideal and just not practical. So I think for the most part of the 2018 and 2019, I've been on a soul searching process to see that what is the real use case of permissionless blockchain and crypto beside just like as a digital gold. So I think that is when I heard about DeFi. It also linked to my previous long-held belief that crypto mainstream adoption will not take off with the volatility involved. And that was when a lot of the stable coin projects was launched in late 2018. I still remember that 3 stable coin, Circle, USDC, Gemini dollars, and Paxos were all launched in the same month, September 2018. And so that firmly increased my belief that stablecoin is going to be the main medium of exchange in crypto in the future. And that just extend into DeFi in 2019, because we have seen a lot of the early traction, such as Compound and Dharma and MakerDAO start taking off. It was still very small that time, but you can see the progress already. Yeah, so that's how the entire DeFi thesis gets slowly solidified and become like a more major thing. And I think by the end of 2019, you can kind of see that none of the other use cases really managed to take off in crypto, except for financial use cases. So I think that at that stage, you can kind of think that finance is actually the biggest use case for blockchain and crypto in particular. Yeah.
Can you talk to me that as we go into late 2018, 2019, what were some of the DeFi applications or protocols you started participating in? Like, if you can even walk me through the order of it, like, was it Compound that made you light up about lending? And then let's say you look at synthetics and you're realizing, okay, this is a much more, this is a bigger mission that they're going after by tokenizing any sort of on-chain asset exposure.
Yeah, I think I definitely get started first at synthetics by minting the stable coins, SUSD that time. Yeah, so that was my first experience with DeFi. And after that, go on to 2019, yeah, I start using other DeFi applications as well, such as Compound, yeah, even Dama a little bit as well, and DeFi. So these are all the early DeFi protocol that I have interacted with. Yeah.
Yeah, very cool. And then when did you start to invest as a, like, let's call it a seed investor, someone investing early stage versus what you could buy on the open market from like a DEX? What are some of those portfolio investments that you all have made?
I would say it's definitely been some evolution in my investor journey. So I think actually until recently, most of my investment is on the public market. And in fact, I think that for a big period of time, that is where the best investment opportunity from a risk-reward point of view to be found. But recently, definitely we have been making a lot more like a seed investment, because I think that we are back to the stage where this whole rally in DeFi have attracted a lot of the bright and talented entrepreneurs to come and build again. Yeah, and that was for most of the 2018 and 2019, it was absent, because with the bear market, a lot of the entrepreneurs are leaving the space, and people are just getting a little bit more conscious of launching a new startup in the bear market. So I think this is changing right now. I mean, yes, we have a big retracement in the price of a lot of the top DeFi crypto asset, but most of the people right now believe that DeFi is here to stay. So these have the effect of attracting a lot of people to come and build again. So we have been seeing some very talented people to come and build, and that's why we are excited to back and support them. And quite a number of them actually, like Parasort, for example, has been building in the space for a while. So it's just that he's ready to grow beyond the current stage. Yeah.
Arthur, what do you think that profile is of the founder in DeFi? Like, what's different versus the rest of the startup world? Like, how do you pick out who is going to be like a winner? You know, when do you get bullish on founders in DeFi?
That's a great question. So I think one of the main difference, I think Kane, from the founder of Synthetics, actually have like talked about this a bit. I think the main difference is you are not just about building a good product. I think that's a big part of a lot of the startup, and it's a prerequisite. But that's not the only part of building a DeFi startup. You need to build a good product, and you need to build for a very specific target audience. I think that because right now it's still a pretty small space. If you're building a product that's too generalized, I think that you will end up attracting nobody. So I think we often see that a lot of the products started out attracting a very core group of user base, and when that really take off, it start to expand from there. And I think another difficulty is how would I say, you also have the target audience size is also way smaller, so your growth can also be pretty sporadic. So like in a traditional startup, if you achieve a product market fit, you might expect your growth to be like a consistent, like 10% a month, 20% a month on a consistent basis. But in DeFi, that's not the case. You might experience like a flat line growth, like no growth for like first 6 months of building a product until you found certain traction, and then you're gonna experience 50 or 100% month-on-month growth for the next 3 to 6 months, and then probably after that, after the bubble is over, then you have a negative growth again. So this is something that is very volatile, and it might not be it's not something that you will find in a traditional startup world. Yeah.
Yeah. And I think definitely that's well put. I mean, it's the volatility is unlike any other space. I think even as we watch the stock markets fall globally 6 months ago, I honestly felt nothing about it. I just looked at it and was like, well, I mean, it's down like, what was it, like 25, 35, 40% in the US at least. And I just thought, I mean, I've lived through 95% drawdowns. Like, this is nothing to get worried about. And Arthur, sorry, what were you saying though?
Yeah, and I think what do I see in a great DeFi founder? I think that the most important one is the mental tenacity to survive a very tough market condition, and just a constant searching for the right product market fit. And I think that what we have seen is the top DeFi protocol right now, they are not launched, I mean, except for a very small minority, they are all launched actually fairly long ago. Like they are launched in 2018 or even 2017 and went through a 2-year brutal bear market. Aave, Synthetics, even Compound.
Yeah.
So yeah, you can see that the success doesn't come overnight. They went through a long period to find a certain level of traction for their product. So I think, and having a founder that is really 100% focused on the protocol they are building certainly helps as well, because I think that this space is just evolved so quickly. You just can't be like part-time and expect to do well. That's my belief. And I think this also extend a little bit to the investing space. Traditionally, we have seen the crypto native fund did way better than like a generalist fund that have some sort of exposure to crypto, but they are not really full-time crypto investing. The deal flow they get is just not really on par with like a crypto native fund, and their understanding of the space get outdated pretty quickly as well. And as a result, they have not been really able to capitalize on the major trend that is evolving in the space. Yeah.
Arthur, in light of what you were saying about focusing on the right use cases, and obviously, you know, just continually building regardless of what happens with the volatility in the market, what are you focusing on right now as a market participant? You know, I know that you have staked with Synthetics. I'm not aware of all the other ways you participate in the markets, but based on your tweets, I assume it's a lot. You know, you seem like you've tried all these different DeFi applications and have some serious skin in the game. So anyways, what are the DeFi opportunities that you are focusing on as a market participant in light of the market drawdown over the last month?
Yeah, that's a great question. I think it's very likely that the next leg of market rally is going to be partly due to the improve in the scalability of the various application we are using. So there's a few ways to achieve it. One is to use layer 2 solution. I think the most popular ones right now are Optimistic and zk. Another one is to deploy on another high performance blockchain such as Solana or Near Protocol or even Binance Smart Chain. So I think the verdict is still out on which one is going to be more popular, but I think it's likely that a layer 2 solution will win in the short run because they inherit the security guarantee of Ethereum blockchain mostly. And the ecosystem is already there for all the tooling to support them. And I think, and this will also unlock a few use cases that's not possible with the existing condition we are in, such as like a high performance derivative trading. So I think that this is an area that coincides with the macro environment. Like we have seen a lot of the issue with the major centralized derivative exchange right now. BitMEX was running afoul with the regulator in US, and we have OKX. The withdrawal is still not open after a few days, just because the founder is arrested by the police, which I think is a perfect storm for a derivative trading protocol in DeFi space to really take off. I think that a lot more market participants will be willing to give it a try. Yeah, so I think this is something that we are positioning, and which I think is going to be a very important part of the DeFi market in the next leg of rally. Another part is, I think, the lending and borrowing space. we are just starting to witness the potential. And
Yeah,
I think the parabolic growth phase is over, but we're still gonna see a pretty impressive growth, but it's just not that parabolic. Yeah, so we are still very bullish on Aave and basically all the major lending and borrowing protocol. With the increased usage of stablecoin, I think the only way is up. Yeah.
when you talk about scalability in the future, how do you gain exposure to that? Do you think about holding an index of the market, or are you going after tokens that power L2 solutions? Like the one that's top of mind for me is Loopring. I think about LRC. That's associated with a popular L2 solution. So, anyways, yeah. How do you bet on the upside of scalability in Ethereum and DeFi, other than holding Ether, which is probably the most popular way I tend to go about it?
Yeah, I think that this, I would say, to be honest, I don't really have an answer to this. And actually, our fund, we have not really made any major bet on a scalability or layer 2 solution yet, because I think that the value capture is not that clear at the moment. I actually discussed this with a few market participants. I think it seems like the likely path to value capture for layer 2 is something that will involve the MEV. So for those that are not familiar, MEV means a miner extractable value, which is quite a technical and academical term, but basically it means that because there is some benefit of reordering certain transactions in Ethereum blockchain, such as front running certain decentralized exchange transaction, and this is the value that the miner can actually extract by reordering the transaction among themselves. But actually, a lot of the miners are not optimizing this yet. So, but I think that the industry actually expect them to optimize this going into the future. And I think that one way that the layer 2 solution can capture value is to implement some solution that can extract the MEV from the layer 2 solution. Yeah, this is a bit technical. I think this is touted as one of the possibility, but I think it still remains to be seen. Yeah, another way is to look at the transaction fee it can capture. Yeah, this is So, but I think that kind of revolve into a very similar to Ethereum. Like, yes, there's a lot of the transaction fee, but it goes to the miner, and without EIP 1559, the fee actually go back into the market by the miner selling back into the market again. So then the value capture is actually not very clear. Yeah.
Do you have any thoughts on using fees on the network to measure demand? So we tend to all get excited while we're also depressed when the gas price goes up on Ethereum, because it's not good for the average user. It's not good for adoption, but in my opinion, it demonstrates that there's demand for the network. I'm just curious, do you tend to buy into that thesis? Because I've definitely heard criticisms of this as well, that fees are not a good indicator of the growth of Ethereum.
I definitely buy into this thesis. I think that, I think probably not the perfect example and comparison, but look at Apple. So Apple have a very expensive product, but people are still willing to pay for it. And in the latest iPhone, they increase the price. They don't even give you the charger, but people are still gonna buy.
Right.
Are still gonna buy it. So I definitely buy into this thesis because Ethereum blockchain is providing a tremendous amount of utility, despite the high gas price. I mean, people are still willing to pay to access it. It shows that there's a value in the blockchain. Yeah, I definitely buy this thesis, but it's just that without EIP 1559, there is the value mechanism. It just it still doesn't really being captured. It just going into the miner's pocket, and the miners just selling back into the market. So it doesn't really lead to a real fundamental supply and demand changes for Ethereum. Yeah, but I think it definitely means that there's a value in Ethereum blockchain, and people are willing to pay a very high price to use it. Yeah, but I think it's always about like striking an optimal point. Like at a certain fee level, it did price out a lot of the other non-DeFi use cases. So I think it really the entire community need to agree on is this what Ethereum is going to optimize for, that we just do not really care about non-DeFi use cases? And I think that the answer right now is still no. I think the entire Ethereum community still want other use cases to proliferate. Totally. Yeah, so I think that's why that the entire community is still spending a lot of resources to scale Ethereum at the moment.
Yeah, absolutely. I got to interview Cooper Turley from Audius the other day, and Audius has 750,000 users, and it's, you know, it's verifiable on chain. So, and it's not like the same thing as just looking at wallets. Like, they actually have a traditional profile that gets created. So yeah, there's a lot of use cases yet to come. Arthur, you know, just I think this morning it came out that PayPal is going to enable cryptocurrency payments. And I believe, I don't remember exactly what they said in the past, but they definitely were not as welcoming to crypto. So I guess, how do you interpret that? Like, how do you think about that having an impact on the DeFi markets and the greater cryptocurrency markets?
I think the impact on the market, if you ask anyone, they'll definitely say it's positive. And I think that this is the same for me. I mean, more adoption is always good for crypto, and PayPal being probably the largest fintech payment company in the world, is definitely gonna bring just gonna ease the access of crypto to everyone in the world. So that's definitely positive for long term. I think in terms of DeFi, it's definitely positive as well, but the effect is probably more medium to long term, because I think that if a user will use PayPal to acquire their crypto, it's probably some hook away before they will interact with DeFi. I mean, so I think that's at least my view. But in the short term, it definitely will enable more and more people to use and access crypto. Yeah, and I think one effect from this, if you look at the PayPal announcement, is they are a payment company, and I think that's going to remain the same. I would say a big part of the use cases, they're actually targeting the crypto payment. Yeah, not just for people to buy and sell crypto through their platform, because I think that they're likely not going to be very competitive on the fee. So for cost conscious investor, you probably will still be able to get a lower fee by using like Coinbase Pro or other platform. I think what they're going to compete on is the payment use cases where the merchant can accept crypto payment but without touching it. So, and I think this is something that I think the one that it should be shaking right now, it should be BitPay. Yeah, because that's what they've been their main business, right? And I think they're gonna push for stablecoin payment, and I think that stablecoin payment is gonna able to reduce a lot of the margin that's being captured by the credit card company right now. Yeah.
Yeah, absolutely. So, stable coins are the future. I can never understand why anyone's still talking about spending Bitcoin. No one spends their Bitcoin. There's no one spending their Bitcoin. They're watching the chart go up. We all are. We've all watched the chart go up, and you hold on to it. It's digital gold. So makes no sense. Arthur, can you talk to me more broadly about how do you think about the DeFi markets in light of the very exciting summer that we had, and in light of the fact that, you know, we have a lot of bullish news that's come out with, you know, let's say PayPal allowing cryptocurrency payments, but then also countered by, this is an election year in the US, which ultimately, like, not everyone needs to care about it, but it does affect the markets normally. And then we still have a global pandemic that everyone's trying to get past. Anyways, how do you think about the DeFi markets in light of all this chaos?
Yeah, I think it's actually bullish for the DeFi market exactly because of this situation. Because DeFi is, you can think of it as like an alternative financial rail, and all this pandemic and elections, and it just increased adoption of a digital economy. And yeah, so and DeFi is just very virtual and digital by nature. So and there's a lot of speculative element into it. And when people are stuck at home, that's why the Robinhood usage just skyrocketed. And I think DeFi's definitely benefited from this situation as well. And I think that the recent correction it's definitely in some ways good for the market, because it allows all these like the more Ponzi-ish of the project to deflate and for people to back to a fundamental building again. Yeah, and then I think this, like what I talked about previously, a lot of the talented entrepreneurs are back to build on crypto again, and they actually see a viable path right now to build a useful application, not just for fundraising purposes. And yeah, I think this is something that is very positive for the space. And despite the decrease in the price, if you look at various fundamental factors, the volume of decentralized exchanges, the TVL, they are all holding up quite well. I mean, granted, a part of it is subsidized by the youth farming incentive, but I think that once people discover the benefit of DeFi, they are unlikely to fully exit again. Yeah, I think, like it or not, this rally have bring a lot of the non DeFi crop into the space. Even for people who are in crypto, they might be very skeptical of DeFi before this rally, but just because of this rally, they just have to learn and pay some attention to it. Yeah.
Yeah. I mean, when you look at just total value locked, which, you know, it's not the end all metric, but it's one that's easy to understand. It's part of the reason that I think DeFi has grown so much. I think that this metric got a lot of people's attention. And yeah, when you look at this, I mean, the total value locked in USD is always going to be affected by the price of the markets. So, you know, sure, you can criticize and say that like maybe something is inflated or deflated based on that. But when you look at just Ether locked, I mean, it's up and to the right and it's not going anywhere as of now. So, you know, there's no guarantee, but I mean, I think, yeah, I agree with you. Like this has been, to me, what's remarkable about the drawdown over the last month is that it's been a drawdown that really hasn't affected the net aggregate value in DeFi. And that's awesome. It's great to see Ether holding its price because ETH tends to still be an index of our space. Arthur, can you talk to me more about like where are you placing bets on the future of DeFi? Like what's missing today in DeFi that you are investing in that you believe is important for tomorrow? And I guess we can skip L2 solutions and scalability solutions. You clearly called that one out, but anything else that you think is missing in DeFi that you're placing bets on?
Yeah, I would say that we are currently placing a lot of bet on the derivative exchange space because I think that although that the potential of it has been talked about a lot, I think people are still underestimating it because but right, by being virtual or being centralized, there's always a lot of constraint that what you can and what you cannot offer. And I think that a team that is willing to go for a full decentralized route will be able to offer a lot of interesting product that is just not possible right now. Yeah, you can offer like a US stocks, indices, synthetic asset. You can offer various different form of prediction market. Yeah, different form of such structured products. Yeah, and I think that this potential is just very big right now, and it's still a very early stage for the entire DeFi space in terms of volume to catch up with the centralized exchange. Like most of like Binance right now, they are easily doing close to $1 billion of volumes in their futures and the perpetual contracts, and DeFi is not even 1% of that right now. So I think that the room for growth is still massive, and this is where we are making a lot of our bet right now. Yeah, I mean, and synthetics is actually one of them. That's one. Another one is I would say that the decentralized exchange space, there's actually still a lot of opportunities. I think the market is just going to continue to expand. This is for spot assets like Uniswap. This is a space that we are still making investment in. Yeah, because we think that Uniswap has demonstrated the potential of exchange for various kind of asset, being stablecoin, being a long tail asset. Yeah, I think there's still a lot of room for growth in this area.
Yeah. Sorry about that. I think people tend to understand the impact of decentralized perpetual, which is, I think, of DYDX and Monte Carlo DEX, both of which allow us to hedge. You know, like that's a place that I can go without having to KYC. Where actually, I guess DYDX, it's worth calling out. If you're in the US, you can't use it, but everyone else in the world can thankfully use their perpetuals market. And so the ability to go in without selling Ether, or I believe they also have a link market, and there's a few others. DYDX has a Bitcoin market. That's huge to be able to go in and put in an asset that you want to remain exposed to, and then be able to trade with leverage. It's so much more efficient with your capital. And anyways, that's a use case that is going to appeal to more people who got burned by BitMEX, or for those that can't risk putting their capital into a centralized exchange that could in fact seize their funds. So yeah, that's one I'm very excited about as well. Any other use cases that you're thinking more people need to learn about in DeFi? Like maybe some use cases that are less well understood at this point and you think are going to get bigger in 2020, 2021?
I think one particular area is the combination of DAO, DeFi, and NFT. Yeah, so I think that if you have been a gamer, you always seen that the gamers are actually a very passionate bunch of people, and I think that until this point, a lot of projects have been trying but have not been able to combine the two aspect of it. But I think that right now we are starting to see that some convergence between the gaming sector. And I think that if you can combine some of the DeFi with some gaming element and also with some DAO element, I think it will just be a very interesting area to observe. And I think that one of the projects that we have been supporting fairly earlier on, Axie Infinity, they're actually doing that. So I mean, they've always been trying to bring some of the DeFi concept to their user base.
Interesting.
And yeah, to combine different elements, and they also have this kind of play to earn feature, which actually it come naturally because some of the item so it's pretty straightforward. Like there's one feature where to breed more pets, you need something called the love potion, and the love potion can only be earned by playing the game. But therefore, a lot of busy people, they want to breed their Axie, but they simply do not have time to play. So they actually just buy the potion from the market. So it creates a market where some other players with more free time at hand can just churn out this kind of potion and to sell it on the market. And there's an article on CoinDesk come out a few weeks ago where some people in the developing country actually make a living income from doing this and selling this on the market. So I think we are going to see a more aspect of this emerging, combining some sort of gaming and a DAO and a DeFi into one single protocol. Yep.
So cool. I need to dig into Axie Infinity more, or bring them on the show here sometime. That's so interesting. I know DeFi has been writing a lot about them as well.
Yeah, and I think when we look at it, right, for the whole yield farming saga, a lot of this also feels very. I think that's my hypothesis. One of the reasons where so many people put so much money into an unaudited smart contract, like for example, Eminence attracted I think more than 10 million at launch, and there's not even a UI for that, and people already put in $10 million into it. I think it's just because that when in crypto, a lot of time the money doesn't feel so real, so people's risk appetite is enhanced as well. So I think that when you combine this with like a gamification, it will lead to a lot of the effect that will be it will just encourage a lot of people to really try out different things here.
That's a really great point. Yeah, it definitely feels like a money video game. And
exactly.
And I don't mean to. I don't think either of us I'm not meaning to disrespect the value of money, and I've always felt lucky that I can even invest money in these markets. But yeah, I think that when you don't cash out to fiat and you're using that, let's say, for bills and investments in the legacy world, yeah, it tends to turn into a bit of a video game. And that's interesting that Axie Infinity, that they're focused on some of these like yield farming or DeFi concepts. The one that I noticed is meme. I think we both have followed the meme project, and that was one where it was like, this is so simple. You just stake a token and then you can mint these NFTs. I haven't sold any of them either. Like I guess I haven't minted any of the more like highly valued ones either, but it's fun. It's like, it's weird. It like triggered something in my brain to want to keep doing it. And I've continued to mint these NFTs, even though I'm not selling them. And in all honesty, I don't even know what's the value of some of the NFTs that I minted.
Yep, definitely.
Arthur, I've only got a few more questions. I want to make sure we don't hold you over. Are you good to go another 5 minutes at least?
Sure.
You're good. Okay, cool. Can you talk to me about how do you think about Bitcoin versus Ethereum now, based on everything that we know in the markets? Your fund is obviously very bullish on DeFi. Like, I'm curious, do you hold as much exposure to Bitcoin yourself, or are you actually like all into Ethereum at this point and less exposure to Bitcoin? Just kind of thinking about like, how do you think of a portfolio allocation in light of all the time we spend on DeFi?
Yeah, so our fund is actually very unique in this aspect that we actually hold almost zero Bitcoin, because that our positioning is very straightforward. You should invest in us if you're bullish DeFi, and if you believe that we can be the investor to pick the right DeFi protocol to invest in. And there's a much more cost-effective way to have an exposure to Bitcoin. So yeah, our fund is not the right vehicle for that. And so I think when it comes to Ethereum, I think it really depends on whether EIP 1559 get passed or not, because at least for now, the Ethereum blockchain is getting used a lot. It's almost at full capacity all the time, but the value doesn't really flow back to the Ether token as of right now, because all the transaction fee is just going into the miner, and the miner are most likely just going to sell into the market to recoup their mining costs. So this creates a situation where although Ethereum blockchain is being used a lot, it doesn't really translate into the value of Ether to a certain extent. I mean, yes, it's getting used as a collateral. That is a big demand thing, but when you still can't really tie it to like a fundamental usage. And when we talk about like a digital money, I think that, like it or not, the ETH is money trend, I do agree that ETH is money, but when you're pitching this to institutional investor, they find it having a harder time to buy into this thesis, because most of the time they are not a user. I mean, that is just a fact of life that they are asset allocator. They are not like a user in all these DeFi protocol themselves. So they can't really get the ETH is money thesis as easily as people like us. So they will only go for Bitcoin. And I would say that the network effect is huge for Bitcoin among the institutional investor, or not. Yeah. So they're most likely just going to buy Bitcoin and ignore everything else. So I think for Ethereum at this market cap, to go to another level, I think positioning it as money to compete with Bitcoin is probably still a way off. So I think it's critical that EIP 1559 get passed, so that the usage of the Ethereum does translate to the value of the Ether token itself. Yeah, I think this is very important.
Yeah. Can you just brief explain just in case you don't know what it is? I'm familiar how you basically are burning Ether in transactions that would have been used for fees. But anyways, can you explain anything else about it? Just because I think more people need to become educated on EIP 1559. And then also curious if you have any thoughts on how anyone can help to push it forward, or I guess voice their support of it.
Yeah, I think EIP 1559 is about two things. One is making gas fee more predictable. So instead of the current auction model where everyone compete to outbid each other to get their transaction included in the next few blocks, so it make the whole fee more predictable. So there's a lot of technicality involved in it. I'm not gonna elaborate, but basically the intention is to make the gas fee much more predictable. And the second major implication from it is a big part of the transaction fee is gonna be burned instead of going to the miners. Yeah, so theoretically, as long as the Ethereum blockchain get used more and more ETH will get burned instead of just going to the miner and going back to the market again. So this has the effect of serving as like a negative emission mechanism to the total supply of ETH. So there will always be a lot of block reward being generated to secure the Ethereum blockchain. But let's say the blockchain is getting used a lot, some of the supply might actually get burned away. So yeah, so you have a full cycle of supply and demand sync for Ethereum.
Yeah, no, that's great. Thank you. That actually is a really good way to explain it. Arthur, I'm checking to see if anyone watching has any questions, so I'll give them a minute. But while we're waiting, can you talk to me more about, let's see here. How do you explain DeFi to sophisticated investors? So when you're talking to folks that might invest in your fund, do they already know Ethereum and DeFi? Or if they don't, can you explain, like, how do you take them from 0 to 1 to actually understanding like why DeFi is so important and why you think it will be successful?
Yeah, I think that it really depends on the background of the target audience I'm explaining it to. So I think if some of them have experience in the financial space, I will usually explain that it's like a fintech 2.0, except that all the architecture behind it is driven by open source software instead of like a current, like a silo wall garden nature of all the major fintech solution. Yeah, so I think that is how I will explain it. And it also sprinkle with some of the crypto asset to incentivize the certain usage. And also, yeah, and the growth of this sector is also more permissionless and global in nature, because I think despite the success of fintech, they are all still very siloed to a certain jurisdiction. So for example, like the WeChat Pay and the Alipay is very successful in China, but it's very hard for them to expand to other countries. But for DeFi, this is not the case. It's global, it's permissionless. So once you achieve product market fit, you can expand to all the country in the world at the same time. Yeah, it's just about the language and the localization of it. So I think this is how I will explain DeFi to them. Yeah.
Arthur, what can you tell us about the DeFi community and the DeFi market in Asia? I think that I live in my own bubble. I live on the East Coast of the United States. Luckily at Zapper, we actually just hired this fantastic product manager who's also bilingual and helping us to like better understand the Chinese DeFi market. But just curious, yeah, how do you think about that? What do you think folks don't understand yet about the Asian DeFi market?
Yeah, I would say the main differences is definitely part of it is actually philosophical, but so I would say that a lot of them are actually much more skeptical of DeFi earlier on because they just think that it's just that they're more pragmatic in nature. They think that as long as it gives me a good solution, I don't really care whether it's decentralized or centralized or not. And historically, they also tend to trust the centralized exchanges a lot more than the Western user. And the whole libertarian ideology is also not very popular in Asia as well. So I think that's just one of the reasons. But I think that they are coming around on this because they just recognize that there's always a lot of issue by trusting the centralized intermediary, such as the recent incident with OKEX, and you see KuCoin was just hacked of a huge amount recently. So I think they're coming around with this, but historically, they've always been a lot more pragmatic, yeah, and coming in with like a more so-called profit maximalist model. I think like DJ Spartan, he's Asian, he's based in Asia as well. Yeah, I think he's like kind of like a perfect representation of like a Asia crypto investor. Yeah, it's like
interesting. Yeah. I definitely have sensed that just with my friends that live in Asia. Like, yeah, they're much more pragmatic about their views of DeFi and the crypto markets, they tend to stray away from maximalist views. It's always been about like, is this useful or not? And I find that very refreshing. I guess like myself, like that's why I like making DeFi tutorials. That's why I joined the Zapper team. It was like, I just want to help people see how to use this stuff and stop talking about things from an ivory tower. I guess like a follow-up to that is, do you see the same investors in Asia that would invest in DeFi? Are those investors as interested in Bitcoin still? Has anything changed in terms of views of the Bitcoin market since we had a major drawdown from 2017? We've clearly recovered quite a bit from that. Crypto markets as a whole have recovered quite a bit. But I'm curious, do those pragmatic investors that care less about maximalist views, regardless of whether it's Bitcoin or Ethereum, how are they looking at Bitcoin now? Like, are folks still as bullish as ever, or are they starting to dabble, I guess, in this case, in DeFi and more Ethereum use cases?
I would say it really depends what kind of investor you're looking at. I think from a more of an asset allocator kind of institutional investor, they're definitely still looking more at the Bitcoin area because it's something that it's like a digital gold. So they're approaching it from like an asset allocation point of view. While for the investor, they're more interested in DeFi. They're usually coming from more of a startup venture investing background. Like, I think that the FinTech 2.0 pitch make a lot of sense to them. So they see that there's a lot of innovation happening in the DeFi space, and it has the potential to become the new FinTech in the future. So I think those of the more venture folk are definitely looking at DeFi, while the more of the bigger like asset allocator kind of investor, they are still more focusing on Bitcoin at the moment.
I've got a few good questions here from folks watching. Someone just asked, when do you expect DeFi to retest the August highs? Kind of a hard one, but do you have any thoughts on that?
I think it will take a while. I think that the part of the August high was driven by a lot of the unsustainable capital flowing into like the pure yield farming coin, where the value of the crypto itself is pretty dubious and hard to justify. So yeah, I think it will at least take 3 to 6 months before we revisit that high. And I hope that the next rally, we are gonna see more of like a useful DeFi driven rally, rather than people just putting their money into like a meaningless food coin again. Yeah.
So Arthur, do you think about remaining exposed then to let's call it blue chip DeFi tokens, like a Uni or Uniswap, Aave we talked about, SNX, or do you think about consolidating into, I guess the obvious one would be Ether in this case? Like, is this, I guess, like, do you hold your position? And I guess I'm speaking more to DeFiance Capital and your own personal portfolio.
Yeah. Actually, there's no difference. I mean, all of my crypto is in DeFiance Capital to ensure interest alignment between myself and my investor.
Someone with
So I would say actually because we are quite a major investor in a lot of the top DeFi protocol, Synthetics, Aave, and X, for example. So yeah, we are still holding strong on our position, and yeah, and in fact we are actually buying more here because I think that some of them have been unjustifiably punished by the market. Yeah. So yeah, that's how we are doing right now. Yeah.
Yeah, I'll share. I've been personally adding to my positions as well. I wish I knew when to sell the top, but I never do that. And in fact, if I do sell, I should let everyone know, because that means you should be buying. And if I'm buying, maybe you should sell. Another question here: any concern on regulators clamping down on DeFi projects, especially on teams which are not anonymous and based in the US, like Uniswap?
Yeah, I think I'm not a lawyer, and usually you do not want to ask people based in Singapore about their view on the US regulation, because we are pretty lightly regulated here. I mean, we don't even pay capital gain tax here, so yeah.
Can I move in with you? Like, every time I hear that, I'm like, I just I'm ready to move away from here. Like it's crazy how we do taxes here. And when I hear about Singapore and other parts of the world, but anyways, Arthur, yeah. Do you try to think about those concerns with regulators, or
I actually talked to a few top DeFi team. I think the general counsel of Compound, Jake, he put out a very good thread on the entire situation facing not just the DeFi, actually entire crypto space. So the Financial Action Task Force issued some kind of guidelines for how various different financial regulators in the world should implement it should regulate their cryptos industry. I would say, at least for right now, the clampdown will not be particularly toward DeFi, but it will be toward the entire crypto in general. And actually, for a lot of DeFi protocol, by being virtual or being non-custodial, it actually make it less likely that the regulator will pursue you. I mean, again, I'm not a lawyer, so this is just my view, and from my experience speaking to some of the top DeFi team that is based in US, because one of the reasons that the BitMEX was charged by DOJ, so I think CFTC, it was a civil case, and the Department of Justice one is a more serious one because there's a criminal case. And the criminal case was due to the violation of the Bank Secrecy Act. And actually the FinCEN actually put out a guideline last year, and according to the guideline, if you're non-custodial, you actually should not be considered as a money transmitter. So if you are not money transmitter, then I don't think you can be violating the Bank Secrecy Act. Yeah. So recently there's a Bitcoin mixer that is being charged as well for money laundering, but again, that is custodial as well. So we haven't seen the non-custodial software services provider getting charged as well, because this can get pretty wide and it's very hard to justify, because if you are saying that a DeFi service provider, a DeFi application that is providing these services that is non-custodial in nature should be considered as a money transmitter, then what happened to like a general Ethereum wallet provider or just any blockchain wallet provider? Like, should MetaMask consider as a money transmitter as well? So because essentially they are same in nature, right? So yeah, I think
it's a very gray area when you talk about
and when you talk to regulators in other countries such as UK and Singapore, which is considered the top financial jurisdiction in the world, they are actually always more concerned about consumer protection. So as long as you're non-custodial, naturally that they are less concerned about you stealing away the customer's money. Yeah, so that is usually, you make the regulatory burden lighter as well. That's usually the case. But I do think there's one thing that the DeFi space should be concerned about is basically being charged as running an unregistered securities exchange, because Ether Delta was charged by SEC previously for running an unregistered securities exchange. And I think that if that's the case, a lot of the DEX will be in a similar situation, might be in a similar situation. But again, I'm not the expert on this.
Yeah, this is one area I've been grateful that, I don't spend as much time on Bitcoin. I've just been so bored by it. But I'm very grateful there's a lot of people that have worked hard over the years to advance that conversation with regulators. And I think I can say that purely from a US regulator standpoint, I think they have very obviously tried to not stifle innovation the last few years. They're calling out the stuff where you're so clearly breaking the law or some sort of ethical code that they're trying to enforce through the laws. And like you mentioned, the mixer one was an obvious one. But at the same time too, yeah, I mean, I'm bullish on DeFi. So I want to let adults make decisions with their money. I think we have all these accreditation laws in the US. It's stupid. It why should someone not be able to invest in high risk, high return investments just because they don't have enough money? You basically have to have money in the US to make those investments. And that's why crypto in general, Bitcoin, Ether, and the DeFi markets have been such like a godsend to some of us. Arthur, before we finish off here, I think we actually already covered this question here. Are institutions in Asia interested in DeFi? I guess anything else you want to add to this as like a final question?
Final questions. I would say that it's important to perceive this market from a more of medium-term horizon, especially as a retail investor, because that when you are, no matter what you are doing in your life, you should always identify your edge. There's a saying in poker that if you can't identify the sucker in the table, you are likely the sucker. So to turn it around, I think that you should really focus on doing something that where you have an edge. So I think when it comes to crypto investing or DeFi investing, you should also identify that your edge. And I think one of the edge of the retail is you have a longer time preference, and you do not need to answer to any of your investor. So this allow you to make some decision that you only need to answer for yourself. Like you do not need to parties, like you don't need to capture all the winner in the space. You can only participate in certain DeFi protocol that you are most passionate about and where you have the most interest and you understand the best as well. And that's fine as well. So, and build a very strong understanding in that particular protocol that you are interested in. I think that this is a much better thing to do rather than trying to just FOMOing around and trying to trade the things that you don't really understand. Yeah.
I really like that. Yeah, take a longer time frame to invest. That's forgiving for anyone that's investing in any space, and then focusing on understanding what you're participating in. One of the cool things about DeFi is the fact that you can be an investor and you can be a significant participant in the market by providing liquidity, lending, doing these things. Like that's one of the coolest things to me about this space is it's no longer just about buying a token, holding it in a wallet, and I guess hoping that it goes up in value. You can continually earn more of that token by actually helping that protocol to be successful by lending, again, by providing liquidity, by staking, and that's what I think really makes this like a unique opportunity.
Yeah, and I think one more part I would like to add is actually that the opportunity to participate in the various governance process and how the protocol should be running. This is something that is actually very valuable, because when you look at the traditional stock market, if you are a retail investor, let's say you're investing in some small cap company, like in most of the countries in the world, you do not have that many rights and your voice are usually not being heard because there's very few channels to reach out to the management or even the board of director. If you write an email to the investor relationship, most likely they're just going to ignore you. But in crypto, it's just due to the nature of the space that almost every protocol have like a social media channel to maintain that communication with the community. So you do not need to be a whale to exert your influence and get your voice heard. And actually, this is very, very valuable. Like if you are a minority shareholder in some like even a smaller company, like let's say like 100 million market cap or even 50 million market cap, even you have invested 1 million, you might not even get your voice heard, and you cannot do anything to positively impact the company you invest in as well. But this is something very different. You can be a very small holder, but as long as you're loud enough, you get your voice heard, you can really influence the direction of the protocol. And I think this is for an investor that prefer to be active, this is a very good opportunity.
It is. It's such a cool opportunity. You can get in touch with everyone. It's and like you said, it's going into a Discord group. It's direct messaging someone on Twitter. People are very approachable. The Barnbridge team that just launched, that whole protocol really got its start with the founder emailing with Kane from Synthetics, and Kane didn't know him. He guessed his email and he just had some good ideas, but that's also like That's an attestament to Kane. Like Kane is kind of that person where he just, I don't know how that guy like filters out all the noise and continues to produce what they do at Synthetics. But so hey everyone, make sure you follow Arthur at it's Arthur_0x. Make sure you also follow in his profile. You'll see DeFiance Capital, which is his fund. I think more importantly, just pay attention to what Arthur's talking about. Like I continue to learn so much from some of the insights that you share, especially as a more sophisticated investor. And actually, I guess I can't pinpoint it, but I definitely got involved in a number of projects, kind of seeing what you were reporting as an active investor, and it helped. It's not like I blindly FOMO'd money into anything. I went and started doing research, and I'm like, all right, I'm coming to the same conclusions this guy is. All of my peers around me are saying the same thing. Like it's time to start to participate in this DeFi protocol. Arthur, anything else you want to leave folks with before we go?
No, I think we cover a lot of things, and yeah, I mean, happy to chat, for anyone that's interested.
Absolutely, man. We would love to have you back. Like, thank you so much for your time. It's like such a pleasure. And I'm gonna play our very loud branded Yield TV video to send us off. But thanks again, Arthur, and I hope we can stay in touch and have you on again.
Yep, definitely. Love to be here again.
Bye, everyone.